Markets are weighing the drop in U.S. retail sales in May, which came in lower than expected. Let's start there with Geoff Barratt, general partner of Barratt Capital Holdings. Thanks for coming in.
Thank you for having me.
What did you make of the drop? Because it was 0.9, but vehicles were a big part of that because people were buying them ahead of tariffs.
Yeah, they were, and March was a big increase in retail sales. I think we can all look at that. But if you look at it in the totality of the year, we're actually negative on retail sales. You're seeing it in discretionary stocks. They've underperformed. They're down 5% on average in the S&P this year. So, you know, I think what's pretty clear, and you're seeing a whole host of politicians and corporate executives come forward, is that the consumers tapped out. The stimulus that they received during COVID, they've spent through that. And now they're having a hard time keeping up with the cost of living. And so what we really need, and you know, tomorrow is the Fed announcement, is some sort of indication that the Fed's going to cut. Market expectations are very low. I think they started the year looking for 4 cuts. Now we're at sub 2. So I think there's very little expectation going into tomorrow, which leads me to think that he could surprise a little bit. Maybe it's on guidance. I can't see a cut, but maybe on guidance. So, you know, let's see what happens. But I think it's pretty obvious the economy needs a rate cut right now.
So, as you know, Jerome Powell has said, I need some clarity before I can make a decision. I don't want to make a preemptive decision that then turns out to be the wrong decision.
Yeah.
Are the retail numbers clarity enough?
It's a good question. And then I would also say that you've had a little bit of spike up here in oil because you've got some global tensions, and maybe that makes him concerned a little bit more. So maybe it is enough to make him think. You know, I would also argue that the way inflation in the U.S. is calculated with rents, that higher interest rates drive up rents because they reduce supply of construction. And I think perhaps having higher rates has been somewhat inflationary. And I'm not sure that everyone fully understands that, and it's somewhat political. And so, look, we'll see. You know, I would make an observation. In Biden's administration, Powell was talking about inflation being transitory. He had a meeting at the White House, it was a formal meeting, came out of that, and he was, you know, the second coming of Paul Volcker. Mm-hmm. And he just had a meeting at the White House with the Trump administration. Does this somehow change his tune? Because he is, you know, at the end of the day, he does act somewhat politically. So I'd be interested to see if we do see a change of tone tomorrow. I think the expectations are so negative on the Fed right now that there could be a potential surprise tomorrow.
Okay. Let's talk about the one big beautiful bill.
Yeah.
We saw solar stocks taking a hit because some of the credits there are being pulled early or phased out. What else could we see affected by this piece of legislation?
Yeah, look, I think it's fairly clear that a lot of the fiscal stimulus that the Biden administration put in is being cut back and was a big contributor to the inflation that we're experiencing. And so the Senate has seen that. I think the House bill version of the bill had completely eliminated credits to electric vehicles. So that's gone. And now we're going to see a reduction, it looks like, in green power. And that ripples through the economy because the gating item on AI development is access to power. And if you no longer have a growth in power supply, which has primarily been driven by greener energy sources, then I would argue that it could crimp AI development.
Interesting.
So,
okay.
That affects the VC community, the venture capital community, and it also affects uranium. Because the alternative, if you can't get green energy, is you go nuclear. And so we've seen Facebook make some aggressive moves in that space in Illinois. Mm-hmm. You know, that's how I think about it.
Let's talk about the price of oil as well. We've got the conflict that emerged on Friday. We've got Donald Trump leaving the summit to try and deal with that. The price of oil pushed higher, above 70, 73 or something now, 75.02 at this point. Do you think it'll sustain?
No, and I think it's captured in the futures curve where expectations for future oil prices are much lower than spot. I think what we've seen with Trump in his past dealings over the course of the year is that he likes to escalate, create maximum tension before he gets the best terms on a deal. And I think he's just doing that with Iran right now. I think people are starting to expect that. I see the move in oil short term. I think the administration wants a lower oil price. It helps the consumer. It helps their votes. So I'd be negative on oil.
Okay, let's get to a couple of the stocks that you do like. One is Melrose, which is British. What do they do?
Yeah, so look, let's give the backdrop. So Melrose is an aerospace company first and foremost. And so what Melrose used to be was a private equity company that did all sorts of things. And people don't really understand it because of that. And it sold everything off, changed its management, and now it's just a pure aerospace company. And the same backdrop, UK stocks are very cheap. You're seeing maximum private equity activity in the United Kingdom right now because they're trying to capitalize on these cheap valuations versus global demand. And so Melrose is no different. Melrose trades at 8 times EBITDA, which for an aerospace company is cheap. I'll give you a comparison. In the US, GE Aerospace trades for 26 times. Howmet trades for 30. The growth and margins at Howmet are actually higher, or at Melrose are higher than what they are at GE. And 66% of its customer base is in the U.S. and all of its revenue is U.S. dollars. And so this is a company that people don't really understand. It's got a big shareholder in Capital Group at 20%. The market's just starting to figure it out. I could see some private equity activity around it. Or some sort of activism in terms of splitting up the company. It has a structures and engines business. The engines business is worth more than the structures business. And so I'm patiently waiting and hoping for some sort of activity. In the UK, there's lots of activity. And so I could see this company, you could come in, it could get acquired tomorrow, and it could be broken up. And if it was broken up, could it be a double or even a triple from here? Yeah, it could. And so So I'm bullish on it, and I think it's an unloved, unrecognized stock. I think very few people know what they do.